Hello everybody. Welcome back to the channel where we talk about stuff. I kind of just woke up, so if the video's all over the place, I don't really know what to tell you. I'm still waking up. So the current news right now is that we're not on 4, we're only on 1, or it's looking like it may only be 1. Confused? So am I. So earlier this year, one of the main ideas was that the Federal Reserve was going to lower interest rates. If you didn't get a chance to do so, I feel like my speech pattern's weird. If you didn't get a chance to do so, on my other channel called The Modern Investor, I went over why the cryptocurrency market was going down. It's the latest or second latest video, because I think a lot of people were a little bit confused. We've seen a gigantic amount of inflows into the Bitcoin market, into the ETFs. We just had the ETFs also launching within Hong Kong. And one of the expectations, obviously, of course, was that the Bitcoin price and the cryptocurrency market were going to go up. One of the, teensy-weensy little tiny problems is that we are at the behest of the rest of the world. So if the rest of the world is terrified, or there's economic events or you've been watching the news of things that have been going on, it spooks markets very, very easily. And also the other issue is that, there's a lot of things to actually, so let's just discuss all of them as best we can while I continue to slowly wake up. The Federal Reserve was believed that they were going to have 4 rate cuts this year. Why 4? Because of the 4 main meetings that they were also going to have, one of which took place on the 1st of May. And the generalized idea is that interest rates are too high. Without getting into too many specifics, the world that we live in currently right now runs on debt. And the problem is that the debt keeps rising that people have to pay, but also the industry is obsessed with the idea of you taking out debt. So when you see all these people fighting for a lower interest rate, it's not necessarily so you and your family can go buy the white picket fence house and all these other things. They're trying to make debt more appealing to you so that you can take out more debt and essentially feed into the system forever in a 15, 30-year period. It sounds insane, but this is actually what it is. So when you see the prospectus for markets going up because of interest rate cuts, it means essentially that debt will become cheaper, more money gets printed, and it's a lot easier for you to take out debt and for companies and corporations to be able to take out massive amounts of debt and use that debt to buy assets, to buy homes, corporate landlords, what have you, so on and so forth. So there have been screams into the wind for about a good 2 years now that interest rates should be lowered. The problem with all of that is that inflation is still really, really high, a lot higher than it probably ever should be. And even if you've been paying attention to any of the other news stories that we've been going over together here and also on the other channel, is that we're constantly quoted that the inflation rate of the US dollar is currently around 4.8, maybe 5%, somewhere around those numbers. And we just went over something recently as well. And the problem is that that's also a lie, because that number isn't factoring in certain kinds of foods. It's not factoring in petrol, gas. It's not factoring in your electric bill, your gas bill, your water bill, how much your rent has risen. It's based off of the CPI, generally the Consumer Price Index, which is a literal basket of goods that they say, well, this is what everyone's buying. And they see how much they've gone up month on month. And then they go, well, that's the current rate of inflation. And the problem is once again, they're not factoring in the other things that you have to do in your life. So the general idea is that if inflation continues to be bad, that the Fed was still going to lower interest rates to give the stock market a little bit of a boost. I'm pretty sure you've seen a lot of the news that certain stocks are doing exceptionally well, and that's what usually ends up being on the Wall Street Journal, in Forbes, on Bloomberg, talking about how great the stock market is doing. But it's a handful of stocks that have been doing exceptionally well because they've risen their prices over the course of the last couple of years because they've been saying that they had to do it because of inflation when it's just actually corporate greed. So of course these companies are posting gigantic record-breaking profits is because they're stealing money from everyone else's pockets. So the Fed just announced that, at least at the time of me making this video, that their decision is not to lower interest rates. And this is why I'm pretty sure you've seen the cryptocurrency market reacting unpositively. Stocks fell for a bit, they kind of stabilized. And even at the time of me making this video, the same exact thing happened within the cryptocurrency space. It's because people are expecting that as inflation, and I mean the numbers that they give us even on TV, which aren't spectacular, 5% or so, as that hasn't gone down to the usual numbers of 1 to 2% that the Fed usually says that they're trying to reach. Of course, the market reacted negatively because the money printing still continues. People are still taking out huge forms of debt, causing inflation to actually rise, regardless of what the current interest rate actually is, and they're going to continue to do so. But the issue is the moment you do lower the interest rate from 7, 8, whatever percent it is now to a 5, a 4, a 3, a 2, eventually a 1. I was talking with my friend yesterday. We went for a walk, and I was like, we lived in a world with a 0% interest rate, and I can't even refathom that happening over the course of the next like 35 and or 40 years. So where we currently stand right now with everything with the cryptocurrency market is that there's a lot of shakeup that's happening between us, essentially. I mean, rising double, more than triple in prices from January because of the ETFs, the worldwide situations that we currently have going on right now, keeping in mind that other countries are also like hyper affected by this. I've mentioned in other videos before, I know people roll their eyes because but understand that, like, if you live in a certain country, you are probably more privileged than other people in other countries. While your inflation may only be going up by 5 or 6 or something percent, there are places who are currently living under 50% as an interest rate, and their inflation's like 80% year on year. So we see these countries also trying to buy like huge amounts of Bitcoin as well, which we've also gone over in the news. But these fluctuations are mainly coming. There was also a video, I'm pretty sure you can find it online. It was called Are Markets Too Scared of the Fed or something along, I think it was from CNBC. And it was basically like, if the Fed sneezes too hard, markets end up falling down. Like, the markets will be just okay, but the problem is that since 2008, 2009, until basically the middle of 2022, markets knew that more money was going to be printed, that anytime that they needed more, there was going to be more. They had very low interest rates so they could continuously take out debt. And it just happens to be affecting our cryptocurrency market as well, as we have, if you want the truth, the cryptocurrency market is basically tightly interwoven into the old system now. That was one of the issues that we were talking about before. The cryptocurrency space is supposed to be its own entity. But when you champion things like BlackRock and Fidelity getting into the space, of course, when they fall, we're also going to fall as well. So there are a lot of analysts who are predicting, of course, a recovery. A lot of people are even saying that they think that the fall in the cryptocurrency market is incredibly healthy, that we actually needed it. And this usually, and I know it sounds crazy, believe me, I understand, like, why do we need to fall? The idea is that when do we catch ourselves? So if we're at $70,000 when we a year ago were at $17,000 and we fall back to 60,000, is that then the bottom? Do we catch ourselves? It kind of has to do with like a how low will you let Bitcoin go before you start buying it kind of thing. So a lot of people are estimating that the bottom for Bitcoin, or the lowest price that people will allow it to go before rebuying it up back again, is anywhere between 50 to 60,000. These are the current estimates that we have right now. The idea being that Bitcoin essentially becomes way too cheap on the market, and a lot of people won't let it rest there or sit there regardless of what the interest rates actually are. All the optimism is still there, which I find kind of great. I'm noticing on Twitter that a lot of people, of course, can be a little sad and or negative when prices aren't going completely up the entire time. But seeing that people are still like, no, we're good. Like, we needed this movement down so that we can establish exactly how low, like, the lowest that people will let Bitcoin go, and then continue moving up from there. We probably have to be realistic, another week or two of what's currently going on, continuing to go on. This is usually how the trend plays out, at least. Prices go down. People to wait for like a week to see if the downfall will continue. If it doesn't, then prices slowly usually end up moving back up. But yeah, just thought I'd give a little bit of a update for what's been going on, because the world is crazy right now. Yeah, I think that's gonna do it for this video. I think I did pretty well for just like kind of half waking up. I should probably go have breakfast. I think that would be nice for myself. I do hope you've all enjoyed. I do hope you all are having a great day. Morning, afternoon, evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.